Hey, I gotta go make bottles for the kids, but really quick. So the bull trade I was in, I tweeted about it, how I got stopped out in profit. Now, as most of you guys know, I love Bolt. A lot of well-known analysts on Twitter love Bolt. Almost a sure thing with the Binance listing is going to be coming up soon. They have this deal with Hisense. Their app is on all these phones. It's going to be on TVs. They have so many big things going on. They did an equity raise and a full audit. This company it's a crypto company that has quarterly earnings reports where they actually show profits, which is unusual. So there's a lot to be excited about long term. But there's a lot of potential here short term. Think about it. If you were to enter a trade right here, you could have made 17% on this run up. And if you have a good risk management strategy like I use, where I use a stop loss and I move my stop loss up progressively to lock in profits, then I'm in a good position to make money day trading this coin as well. But I want to caution everybody, when it comes to day trading or trading at all with low cap coins, there's a few things you need to know about. I encourage everybody to look at free resources. If you can afford to, time and money, join a private group, whether it's mine or somebody else's. Make sure it's an educational group where you can learn a lot about this sort of stuff and ask experienced traders how to do certain things and how to understand certain concepts. But I wanted to show you a couple really quick basics just so you can understand what my recent tweets were about with respect to market selling. So if you look at Bolt, it's a low cap coin, which means it's low in price, but it's also low liquidity. There's not a lot of trading volume on it. So in this instance, right, I got into a trade when we got above this 222. You could see that's one of my Ichima model. This is one of my major dynamic support and resistance levels. And you can see it was a really strong resistance getting above that red line, that 222 EMA. We pushed above, we were looking extremely bullish, and then we tanked. And now we're moving back up, which is great. I got back in. But what sucked is we dropped down 12, 15%. Because most likely one person with a large wallet had sold a substantial amount here. And it was an inexperienced trader because that person sold with a market order. Now, let me show you the difference just so you understand the context of my tweets from the last hour or so. We were moving up. I moved my stop loss up. I locked in 5% profit. Everything was going great. And then at this point, this guy sold and I got stopped out of the trade. I made money. I made a nice profit on it. I'm happy with how it turned out. I wish it could have kept going up a lot further, and this guy didn't sell. So to understand what happens when you market sell versus limit sell, these are the buy books and sell books, right? So these are the buy orders, and these are the sell orders. Now, when you look at the order books, you can garner a lot of information, but one of the keys for inexperienced traders, if you're trying to trade low cap coins, you need to understand why you don't want to market sell or market buy for that reason. If I wanted to buy one Bitcoin worth of Bolt right now, that would be about 750,000 tokens. So this is an order on the sell books. This guy is selling 750,000 tokens. It's just about a Bitcoin worth, so that's a good reference. If I placed a market order right now and I went to market and I want to buy 750,000 tokens, right? And, you know, this obviously I'm not logged in. Assume I had a bunch of Bitcoin. And I place that market order. What's going to happen is the order doesn't show up on the buy books. As soon as I place the market order, it's going to use the market price. So the current price is 13.17, and anything above that, it's going to buy whatever orders are available so I can get my 750,000. So it's going to buy the 5,900 from this guy. This guy is selling 200,000 tokens at 13.34. This guy is selling 105,000 tokens at 13.35. This person is selling 29,000 tokens. This person is selling 31,000 tokens. So if I were to place that buy order for 750,000 Bolt, it would buy everything here on this entire sell book until it got to this guy. This guy is selling 760,000 himself. So it would fill all of these, and then it would take another 350, 400,000 out of this guy's sell order. As soon as I place that market order, I instantly buy all of these orders to fill my market order to buy, and the price on the chart will instantly shoot up to 13.47. So from right here, that would be about 2.3% up. So I would pump the price 2.3% by buying one Bitcoin worth. Now, if you look at the order books here, you'll see it's pretty low liquidity. There's not a lot of volume. If this one order wasn't here, where this one guy was willing to sell a Bitcoin worth 750,000, if that didn't exist, in order to fill my market order, it would have actually kept going all the way up. It would have bought 10,000 from this guy, 2,700 from him, 5,700. It would have bought all these orders, right? And it would have gone all the way up to like just about 1,400. So imagine if I were to place a market order, this guy's order wasn't there, right? So it buys all of these sell orders and the price shoots up to $13.95. If that were to happen, in order to fill my 750,000 token buy order, I would pump the price 6% myself. Now, the downside to that, it's great for people who are in the trade. You want the price to go up, of course, right? But if I just bought in like that, I paid 6% above the current price to get those tokens. Now, if instead I were to stay at the current price and I were to take this guy's order and buy 200,000 tokens from him, the price doesn't move. It's pretty much right where the current price is. And then I can go up one more sat and buy 100,000 tokens from this guy. And then I can wait 20 minutes until a few more sell orders appear on the books. And then I can buy the next couple orders. But if I were to place one big order at one time, it's going to shoot up the price. Same thing when this guy sold. So this guy said, all right, I'm going to get out and take profit. So he sold right here, placed a market sell order, and then the price on that one candle went down over 12.5%. So it's as if he went, all right, I'm going to sell 1 million Bolt tokens right here. I'm going to sell 1 million Bolt tokens with a market order. Whatever, you get the point. Market order, sell 1 million tokens. Now, in order to do that, I'm going to sell 7,300 to this guy because this buy order, Bob Johnson is buying 7,300 tokens right here, right? That's one guy in his order. This is another order. This is another buy order. So in order to sell 1 million tokens, I'm going to sell 7,000 to him, 83,000 to him, 35,000 to this guy, 55,000 to this guy. And my million tokens are going to fill all these buy orders, and the price isn't really going to stop going down until maybe even lower than 1,200. So right here, if I were to start that sell order here, by the time it fills, the price is going to be 10% lower. So I am selling at this point right here for these guys, and then by the time I'm halfway through my order, I'm selling at 1261, and then to fill the rest of my order, I'm selling at 10% lower of a price. So I'm taking a substantial loss to liquidate those coins quickly. So market orders are a terrible idea on illiquid low cap coins. Instead, if I was selling, just like the example I gave with buying, I could click this guy's order right here, right? And now 1311 shows because I clicked 1311 and he had 78,000 tokens. So I can say, all right, I'm going to sell 78,000 tokens to that guy, and I unload 0.1 BTC worth, and I fill that guy's buy order. This guy's trying to buy 84. So now I can say, all right, if I set the price to 1267, I can sell 175,000 more tokens, right? So I can place that order. And then I can wait and I can give it time. And if some guy in another couple hours from now were to place an order like this to buy 0.6 BTC worth, this guy's going to buy 490,000 tokens. So if I see an order pop up like that, I can now unload my million tokens or half of my million tokens without really dropping the price all that much. So it's important to understand the difference between market versus limit orders, but on low cap coins specifically, you have to be careful. You can't put $10,000 into Bolt right now, buy it, and then think when it goes up 5%, you sell it with a market order and take a quick 5% profit. That's not how it works. If you do that, if you buy $10,000 worth of Bolt right now, you will spike the price up 5%. And when you sell it, you will actually crash the price 5%. So in the end, even if the price of the coin goes up 5% between your entry and your exit, you're not making any money, and you might actually be taking a loss. The guy earlier today, not only did he ruin a good thing and destroyed my trade, again, I got stopped out in profit, so I'm not that pissed off about it, and it gave me a really great entry on the 90/90 EMA right here. But it was stupid on his part, because from the top of this candle to the bottom of the second hourly sell candle was 15%, which means some of his order filled up here, but he probably lost an average of 7.5% by selling that way. If he was an experienced trader and he used limit orders to slowly sell into the buy books as the buy orders started filling up the buy books, he could have walked away with an additional 7.5%, maybe upwards of 10% profit. And considering how many tokens he sold, it looks like it could be upwards of 10 million. You're talking about a substantial amount of money. Anyway, so that's a very quick intro into order books and limit versus market orders in the context of this specific trade. If you have any questions about it, feel free to hit me up, DM me anytime, or post on my thread. And if you guys are interested in joining my group, I run my group with Chart Vampire, Big Jonas, and the Cryptomist. All four of us analysts contribute charts, trade ideas, analyses, all sorts of stuff. And then we have Flux University with a lot of educational content. You could talk to us and ask us for videos or explanations on various topics, just like I'm doing right now. We really love to teach. It's a passion of mine. I feel like it's the most important thing that I can do to give back to the community. It took me a long time to get to where I am as a trader. I was a noob just like you guys 3 years ago. I got wrecked just like everybody else, and I earned my way back. And now I've become a very successful trader, and I love sharing that information with you guys and teaching everybody else. Because when I first got wrecked and I didn't know what I was doing, I would have given anything to have somebody with my level of knowledge and experience to teach me and help show me the way. So again, if you don't want to join my group, that's totally fine. But you should consider one of the groups out there, because there are a lot of guys who I like and trust who have groups that also do a lot of educational content. And I think it would be extremely beneficial for a lot of you guys. If you've been in a situation like this where you've gotten into a trade and then you sold and you don't know why, but when you sold, you ended up losing money on the trade. If this sort of stuff happens to you, you shouldn't be trading. You need to press pause, start paper trading, practicing these different concepts, watch some videos, read some books, learn more and more, maybe find somebody in a group or something to mentor you. And once you get to the point where you can trade successfully and you can paper trade and bring in regular profits with a paper trading account, then you can move back to trading with your actual money. But it's always a good idea to press pause, kind of take an inventory of what you do know, what you don't know, and then you can decide what are the important topics you need to work on. I'll tell you right now, the most important thing, anybody worth their salt who's an educator or a trainer or a mentor is going to have you focus on risk management first, because on this trade I got in, if this guy dumped, it's a low cap coin. So if one guy dumps, I could take a big loss on that trade. The most important thing that I do on every single trade is have a stop loss order. So if I make some money and I'm up 15%, I'm going to move up my stop loss order. So I'm at least, no matter what, going to lock in 5, 6, 7% of my profit. So even when the price tanks, I have my sell orders ready to go to protect me, and I can't take a loss. That's the most important thing you could do to stop yourself from taking a loss. Everything else comes with time and practice. But once you get risk management down and you can stop yourself from losing capital, then you could focus on how to develop the skills needed to build that capital. Hopefully this was a worthwhile explanation on the order books and market versus limit orders. And again, any other questions, feel free to hit me up anytime. Thanks, guys.